Hello and welcome to another episode of the Prognosis Podcast. Dr. Subramanyam is studying BPL medical technologies in India, but before that, I think in his career, he has been at every inflection point of healthcare in India, be it at Roche, followed by Novartis, and then leading the India South Asia business of GE Healthcare. Welcome to the show, Dr. Subramanyam.
Thank you. Thank you. Hey, it's Shravan, please. And thank you so much for having me here.
Logic tells you that trying to solve for healthcare in India is a very tough ask. And it's like playing the game on a hard mode.
Yeah.
What was that compelling reason or calling in your case?
I don't know. I think it's a bit of an addiction to struggle. It's like you want to see a problem and you want to take it head on and try to solve it. There's this draw to India. You see so much potential. There's so much intellectual horsepower here. There's so much clinical need here. That's always been what drives me.
To begin with, if you have to distill your strategic thesis for BPL 2.0 in one sentence, what is it going to be?
The 10 in 10, right? So we would love to be 10x our size in 10 years through a combination of organic and inorganic growth. So if I were to distill commercial goal, it's that. The pathway of how to get there, again, just taking it step by step. Number one, if we could own more of the products that we sell rather than trade. Goal number two is to do the same thing with manufacturing. So if you own the IP, these are proprietary products which you have control over the life cycle, then we can also control the manufacturing cycle. Once we solve for 1 and 2, it gives us the opportunity to sell in other markets, right? But once we own the product and own the manufacturing cycle, then we can expand the market to other geographies which have similar traits to India.
Hello and welcome to another episode of the Prognosis Podcast. Now, if we look at the evolution of healthcare in India, especially in the last 20 years, we have added capacity everywhere. Be it on the hospital side or on the diagnostic sides. If you look at pharma, for example, we have created APIs that supply to the whole world. But the story, unfortunately, in medical devices manufacturing is a bit different. We largely are still consumers, and we spend billions of dollars in terms of importing medical devices from abroad. So, to me, actually, that gap between the growing healthcare needs of the country and our installed manufacturing capacity is where the opportunity lies. And we have a guest on the podcast today who will help us in unpacking exactly that opportunity, and we could not have asked for anyone better. Dr. Subramanyam is heading BPL medical technologies in India, but before that, I think in his career, he has been at every inflection point of healthcare in India, be it at Roche, followed by Novartis, and then leading the India South Asia business of GE Healthcare, to advising top funds like Premji Invest and Claiborne Capital in India. Dr. Subramanyam has seen it all. But I would say that now he has taken the most ambitious project of his career, which is to reimagine a 5-decade-old brand, BPL MedTech. By the way, this brand is what gave India its first indigenous ECG machine way back in 1967.
Absolutely.
Great. So it would be super interesting to see how he reimagines this brand in the age of AI, digital health, and indigenous manufacturing. Welcome to the show, Dr. Subramanyam. Now, your profile has something very unique. You are a third-generation clinician, as we were discussing off camera. So you bring something very rare to the role of a medical or a MedTech CEO. You understand the clinical needs as well as the system that requires a manufacturing setup like this to scale. So would be super excited to talk to you about the MedTech industry in India. By the way, this is our first MedTech focused episode on the show. Welcome to the show, Dr. Subramanyam.
Thank you. Thank you. Hey, it's Shravan, please. And thank you so much for having me here. Really, as you pointed out, very passionate about healthcare, about MedTech. And it's not on LinkedIn that I'm a third-gen physician, but that's really the core of why I'm here, why I've been in the healthcare industry. There's really nothing else that I know and do. And the potential is just absolutely immense. This is my second stint in India, actually. I initially, after grad school, 20 years ago, I had moved back to India because of the promise of India and all the action that we were expecting then. Turned out to be, it was fun, it was a great learning, but I went back to, I spent some time across Asia Pacific and North America, and then came back again, gave up my green card once and for all and said, this is it. And it was not disappointing.
Wow. Let's dive into your story and let's start from the start where it all began. Third generation clinician. Would love to understand the story of your formative years and what were some of the value systems or how did your upbringing shape who you are as a person and of course the career choices that you eventually made.
Sure. So my father and grandfather were both pathologists, with all three from Madras Medical College. So it's a bit of a rite of passage. My grandfather founded India's first private pathology laboratory back in the 1930s.
Wow.
It's called Ehrlich Laboratory, and eventually it changed hands, and the family finally sold its stake only this year. So pretty much from infancy, being close to healthcare service providers, the business of healthcare has been very, very core to my family. It's always dominated dinner table conversations over the years. But my sister and I were both given a relatively free hand to think about what we wanted to study, where we wanted to go. Like for me, I could study anything I wanted as long as it was MBBS, and anywhere I wanted as long as it was Madras Medical. But in all seriousness, we had a sporting childhood. So I was a competitive swimmer and represented India during my school days. And so I think that was really what shaped my childhood, less than the medical or business side. And it's participating, being competitive, being disciplined, and seeing the correlation between hard work and output. I think that's really what shaped my childhood, and eventually in my career as well, the value of teamwork and hard work. I think that's what followed me through. Medicine was sort of something that I gave deep thought along with other fields. I was quite passionate about physics as well, and thought about that. But eventually, this seemed like a viable thing to do considering the family. But post my MBBS, that was, I think, probably the first generation, I'm talking 25 years ago, when medical students were also thinking about business in healthcare. So you saw a lot of people going into hospital administration. So I took a course and I did my master's at Cornell University studying health administration. And that really broadened my horizons considerably, right? Because you spend a lot of time understanding health economics, why things cost the way they do, or how they are marketed in different segments of healthcare. So that helped a lot. Healthcare marketing, statistics never leaves you, no matter where you go, what you study. I think statistics is core. Anything we do now, like as a CEO, most of my time is spent in risk analysis and management, right? So that's a bit of what shaped my journey here.
At what point of time did you realize that you would be let's say a better management professional compared to a clinician?
I think so. I really enjoyed my time at med school. I really loved being with patients, and it's something so tangible that you do, that you see an outcome. So through med school, I never really saw myself leaving clinical medicine. I enjoyed working with kids. I enjoyed obstetrics. I enjoyed surgery. All of this was so gripping. And then I spent some time at the family center, the pathology lab. And that was the point at which I saw that there was a need to also view the pathology service as a business, just to enable us to serve patients better, serve more patients, bring in new technology. So for everything you're doing a total cost of ownership analysis and trying to figure out what's the right product, when do you bring in new technology. And so I found myself spending more time with advisors and consultants on running the commercial side of the business. And that was the inflection point for me to say, why don't I actually study that and come back and then work with the clinicians who are in the system.
That's interesting because legacy does matter a lot, but it can be both, I would say, a prison as well as a compass.
Yeah.
So, in your case, when it comes to choosing healthcare, what was it?
So I think just watching my dad at work and seeing his, the impact he had on his immediate surroundings, family, society, community, I think was really quite special and something I wanted to emulate at the time. And then after studying management, I realized that you can still have impact, but in different ways. You don't necessarily have to see patients one-on-one to have impact in healthcare. So I still see myself very much as a healthcare person, but functionally more on the business and administration side than seeing patients actually.
And Shravan, you had exposure of much, I would say, developed markets early on in your career, by the way of your education and your initial years in your career as well. Uh, you could have continued to work abroad, lead a very comfortable life, and I've been doing this podcast for a lot of leaders now, and every time when somebody comes back, there's a very compelling reason for them to choose India, because otherwise, logic tells you that trying to solve for healthcare in India is a very tough ask. I mean, it's like playing the game on a hard mode.
Yeah.
What was that compelling reason or calling in your case?
I think I don't know. I think it's a bit of an addiction to struggle. It's like you want to see a problem and you want to take it head on and try to solve it. That's always been what drives me. Even the initial years, I could have stayed at the family business also, fairly comfortable, well-oiled machine. I could have done that. But so early in my career, just settling for a day-to-day routine felt, it didn't excite me, which is when I tried the stint overseas. Again, there are just challenges to be had everywhere. But there's this draw to India. You see so much potential. There's so much intellectual horsepower here. There's so much clinical need here. So if there's a way to come in and do something that makes a little bit of a difference, that's
Yeah, the
allure.
humongous humanity that you can address here in India,
Absolutely.
that's like
Yeah.
not compared to anything else.
And the thing is, Vivek, we live in a fairly global situation. I still travel a lot. I'm still meeting my colleagues and my alumni from around the world. So it's not like we've lost out on the international exposure or experience.
Sure.
I still very much miss living in the US. I loved our friends and time that we spent there. I used to keep going back to campus to teach health economics. And as you would have seen in our campus, we've got a batch of students from your alma mater, and they are doing pricing analysis, health economic studies. So I remain very engaged with the student community, and that gives me joy.
Yeah, very interesting. Why don't you take us through early years of your career post your education? I mean, MedTech, of course, happened later on in your career, but would love to understand how the formative years were.
Sure. Yeah, got picked up out of campus at Cornell with a niche in vitro diagnostics company called Date Bearing, which very quickly got acquired by Siemens. So within a very short span of time, I enjoyed the niche experience, and that morphed into a giant global corporation experience. And at that time, they were setting up their India operation. So very soon, I got jettisoned from the global, US organization to India to be a part of that team. And it was a bit of a paradox because you're working in startup mode for a giant company. And that was a terrific learning because you have recourse to the learnings of a large company and the resources, but you're working with a small team and you have to grow at twice the pace of the market. It was all go go go. There were two managers that really shaped my life and career. One was the global person who brought me into the business, Jean-Luc Deblichauer, French gentleman, very aspirational, very big picture, strategic leader who helped me. In my early days, he was very senior in the organization, but we worked well together. And eventually, even when I changed companies, I still stayed with the same boss. Right? I moved with him to the next company, to Novartis. So learned a huge amount from him on taking risks and managing them well. And the other person who really shaped me was the India country head at the time, Dr. Shivakumar. I'm still in regular touch with him, and he's probably the last word when it comes to true customer centricity. Now customer centricity is a meme. People say it like it's, they're almost derisive about it, but
Yeah.
he really embodied it. And the sense of urgency and passion that he had towards solving a customer problem, I think that has stayed with me. And even now, if I run into a situation, he's someone that I can speak to and reflect with.
This was your role just before Roche.
This was, yeah, well before Roche. So Dade Bearing, and then subsequently to Novartis with Jean-Luc. So I spent a number of years with Novartis, initially in Hong Kong. I was covering some portions of the Asia Pacific business with Novartis. And then I transitioned with them to the global pharma oncology business in New Jersey. And that was a completely different world, right? So this was from medical equipment to the pharma world. And scale just went from hundreds of millions of dollars worth of revenue to billions of dollars worth of revenue. It was a part of a core crack team of some of the finest marketing and strategy minds in the industry. And it's very humbling, to walk into a room and everybody in the room is more accomplished and just really, and their intellectual horsepower was next level. So the learning there, I think, in a very short span of time was intense. And because the scale of what you're doing there is so high, the margin for error is also very low, and the tolerance for not delivering on a commitment is also very low. So you really learn to it's like moving from Ranji to the to international team overnight, and the stakes are much higher.
Why don't you talk about your pharma experience, Shravan?
Yeah, so I worked for a fantastic brand called Gleevec, and I think anybody in the hematology space or the pharma space, they would really, recognize this. Multiple case studies and pricing stories have been written about Gleevec. It was the first drug that could credibly treat in the long term, treat leukemia, and eventually the next generation of that drug could even cure a patient. So being at the center of such a brand, over 5 billion in global revenues, transformational clinical outcome, it was a heady experience. So I was part of the global product strategy team for Gleevec, and I was briefly the life cycle leader for that brand about the time when it was supposed to plunge down the patent cliff when during loss of exclusivity. But still, the power of the brand, the trust that clinicians had with this product was so powerful that it rolled along for some time. So that was my first global role, and I worked very closely with various regions. I spent a good amount of time in China, Japan, India, other markets of clinical as well as commercial significance, and worked closely with the R&D and clinical scientific team as well as the commercial team. So you get to see a breadth of of experiences in that one job. Also had a lot of exposure to the president of the oncology business. That's also something, as a mid-career associate, having that kind of exposure was very special. Investor relations experience, being part of the team that provides intelligence to the investor relations. It's just, the scale and scope was mind-boggling, and just being, I was just a passenger in that train, but being in that train, seeing how it goes, how it works, I think those are a lot of ideas that shaped, my eventual role as a country head, as a CEO, and trying to bring in that process excellence and ambition, I should say.
Yeah, especially for a young person, that kind of an exposure to shadow the top guy, I think it's amazing. Early on in my career, I got an opportunity to shadow Mr. Ambani as one of his EA. If I would not have taken up that role, probably I would have still have been in a very traditional path that a mechanical engineer does, which is, let's say, manufacturing.
Yeah.
Nothing wrong about it, but yeah.
And I think, sorry, just to close out a little bit, the boss that I'd mentioned, the French gentleman, he had no respect for boundaries, for career or job boundaries, if you would, right? So any problem that came up, whoever was up to the challenge, he said, go ahead and take it. So if there was a position vacant and it was going to take time to fill, he'd look around the room and say, does anyone want to do it? I'm not going to pay you anything extra. So you're welcome to double hat, but you'll gain experience. And so if you actually look at my LinkedIn, I have 25 years of experience within like 18 years, because I've double hatted for most of my time when I was working with this guy. He was brutal. And I hope he sees this this podcast and knows how he scarred me. But again, we remain friends, and I think he'll be congratulating himself for the trauma he's caused.
Yeah, would be happy for the way he has been able to groom people below him, and that's the hallmark of true leaders. Take us through your the next journey, and which was in pharma itself. How did that happen, and what were some of the key highlights of that experience?
So post Novartis, there was a fantastic opportunity to lead Roche Diagnostics in India. And Roche, as you might be aware, is one of the largest MedTech pharma combined companies in the world, and highly respected. And being from Novartis, which is headquartered in Basel, Roche was also headquartered in Basel. We knew each other well, know the culture. Products are very innovative, and at that age or time in my career, I was 37. The opportunity to lead a country as country organization as a CEO, full P&L, 400 people, was a very special opportunity, and I couldn't say no to that. Also gave me a pathway back to India. It's a typical NRI conversation you have with your other Indian friends, right? I want to go back to India, but I don't know when. And the thing is, everybody gets opportunities, but you keep kicking the can down the road. And when a company like Roche comes asking, it's very hard to say no. And zero regrets about that. One of the finest companies in terms of product innovation, long-term vision. The culture there is so welcoming. Huge amount of collaboration. And I was part of the Asia Pacific leadership team. Lance Little still heads the business in Asia. We are still in touch, and he still provides inputs and ideas as if I'm a member of his team. And those are the kind of relationships that you build in a company like Roche. And equally with customers, there's like, say, Dr. Sanjay Arora of Suburban Diagnostics. He never behaves like a customer. He behaves like an insider, very liberal with his advice and inputs and insights. And I think a lot of that has to do with the culture of the company as well, right? That where you treat your customers as your peers and vice versa, and you grow together. Naveen Dang of Dang's Path Lab. A lot of people have that loyalty with the company, but it comes with the people. And I learned so much from my time at Roche. First time leading a complete P&L, I was completely in over my head. When I first came in, there's so much, day to day operational, um, bandwidth that I had to create just to run the show. But then you learn, right? And then you have your mentors from the industry that you learn from, and then you learn to delegate. You learn to trust people, and then you learn to build a team. I often say, as a CEO, what do I spend most of my time with? It's two things. One is finding the right people and empowering them, and the second is managing risk. Right. So Roche taught me a lot about managing people, bringing the right team, empowering them, working together with them, spending a lot of time with customers, um, and really enjoyed the long term thinking of Roche, and continue to be in touch with my team there, and my successor there. We still exchange notes, and so it's a great.
And this was your first true C-level role.
Yeah, so my first true C-level role, and again, you have the comfort of being part of a large organization, but you also have a little bit of the hustle of being in a country where you're growing at breakneck pace. When the rest of the market is growing at, say, 10%, you have to necessarily beat the market to stay relevant, right? And constantly launching new products, new technology. Also saw the value of this shaped my thinking in non-transactional relationships, right? Where you work for the success of your customer. How do you work towards their empowerment, their education? How do you help them build their business? I think that camaraderie was very strong, and I believe continues to remain strong at Roche. And that shapes my current thinking at BPL, and what I would aspire to do is create that kind of a channel here as well.
And was diagnostic industry your biggest consumer in Roche in India?
Yes, India is one of those unique countries. I think very few countries where diagnostics is larger than pharma.
Yeah.
But that has more to do with the dynamics of the pharma industry, which in India is dominated by generics and local companies. And there's not as much revenue for the branded innovative companies. I think that's across the board. But Roche Diagnostics was at the time larger, continues to be so.
Shravan, on that note, there's a question which I keep asking, especially diagnostic leaders when I meet them. So I believe that diagnostic as an industry is underappreciated in India, because 70-80% of the medical decisions happens on the basis of what you guys were trying to do with these diagnostic players. But if you look at the quantum of investment as a percentage of the overall investment in creating healthcare capacity in the country that goes into diagnostic, that's less than 10%. How do you explain this paradox?
Vic, what you said just now, I would put it in a reel and play it on repeat, because I don't think that message has been heard enough. But having said that, as long as we are in a position to create clinical impact, clinical value, our time will come, right? And this is just the nature of the beast. This is how the value chain goes. We are an important cog in the wheel, but while we are, we have a lot of importance in the overall healthcare continuum, right? Whether from screening, diagnostics, therapeutics, whatnot. You're right in terms of the ratio. It's heavily under-indexed in terms of the investment, when the impact on clinical utility is very high, but it's also a very competitive space, right? So if we were the only show in town, then you'd be able to work, get your revenues up and manage pricing in a way that was reflective of the clinical impact. But it's a tough space, it's a competitive space, and you want a price to value, That's what I was telling the kids from ISB. Aspirationally, we want to price to value, but realistically, you price to market. So that's where we are.
So Shravan, let's now talk about the pivotal moment of your career, leading a $1 billion P&L, which
Yeah.
was GE India and South Asia. Why don't you take us through that journey? First of all, how did it happen?
Yeah. So this was a really difficult choice because, like I said, Vivek, I really loved my time at Roche. Culturally, felt very much in tune with the business, and there was an opportunity actually to move to the global pharma organization in Switzerland, and it even reached a point where the hiring manager had sent the details, the flight codes for bringing the family over there to check out schools and everything else. But that was Feb 2020, and so there was this little disease that was starting to spread, and they said, so we said, okay, let's give it a few weeks. March became April, became May, June, and there was no end in sight at the time. And in the meantime, the opportunity from Wipro GE had come forward. And again, you're at a crossroads where once you go down this path, you have to commit to a certain life and timeline in a global multinational company, versus being in India, where I felt the job is still not finished. It'll never be finished. There's so much to do and so much excitement here. And working for a highly respected company like GE, and to me, probably more valuably, working with Wipro, and the chairman, Mr. Premji, was on the board, was the chairman of Wipro GE. So I don't think he's someone that you say no to. And they made a very generous offer, and they have a very disciplined succession planning process. So the requirement was for me to come in, spend some time overlapping with my predecessor, do a clean handover in every respect, operational and customer. And GE is so disciplined, and the operational rigor in GE is next level. And so that happened right at the peak of the first wave of COVID. On day one, when I landed in Bangalore, I received a text message from my lab that I should not travel because I've tested positive for COVID. So I landed in Bangalore and got the message that my result was positive. And so my first week at GE was spent in quarantine. And I'm glad it was detected, because you don't want to be the guy that passes on
Infects
COVID
other,
to
yeah.
Azim Premji. So, but again, very warm, welcoming team, long-term, loyal customers. You learn so much from them as well. And but the difference between, say, a Roche and many other multinational companies and GE is that GE was a local company, right? Partly because of the relationship with Wipro, but also because of some of the work done by my predecessors. You look at legends in the industry like a D.A. Prasanna, Terry Bresenham, who came in from the US. I think she's one of these leaders who plant trees that she doesn't sit under, right? So the work that she did, investing in the India operation, R&D, manufacturing, I benefited from that 10 years after she left the country. Huge learning for me also to think about, if you want a company, a business to survive into the next decade, the next half century, this is the kind of confidence that you have to have, and the confidence that the leadership has to have in you to be able to place those bets. There was a prevailing sentiment, or a statement actually made by my last CEO just before I was leaving, about, you have a choice. You can either make the decade or the quarter. What are you going to do? Obviously, you want to do both. You have to do both, but you'll have to strike a balance, right? And And that imperative keeps shifting. I think from time to time, depending on the life cycle of the company. I think GE had the luxury of saying, "I'll solve for the decade or the century," half a century ago. But now, in the last 5, 10 years, GE had been coming out of crisis, and there was a lot of emphasis on delivering on the quarter because stock price was responding to quarterly and monthly outcomes. So I think GE has also been going through a cultural shift and a product philosophy shift. But the India business had been really strong and very well regarded as a local company, a local employer. At the time of my leaving, Wipro GE was generating over $1 billion in revenues, aggregate revenues across the commercial organization, the manufacturing exports, as well as the GCC. And close to 4,500 people.
Wow.
Generating world-class patents, manufacturing products that were exported all over the world. I think my learning there was that it can be done. There's nothing wrong with products that come from India. There's always been a lingering perception, I think, amongst our customers that an imported product is better than an Indian product. And if you look across industries, you take automotive, you take any segment, there's that I don't know, inferiority complex almost about Indian products. But working at Wipro G just removed any doubt for me, and I think I've emerged from that with the confidence that we can build a product company to be competitive on the world stage in India, for India, in India for the world. But we also have to have the humility, I think, to accept that the world has moved on, and if you want to be contemporary or if you want to think about the future, we have to have open borders, at least as far as thinking is concerned. You need to bring in some of the best ideas from around the world, some of the best technology, partner, collaborate, source intelligently, and then we can create a powerhouse here. We've seen that being done in the automotive space. That, of course, took decades, right? India started out making components and then eventually, knockdown units and high-level assembly. And today, India is a significant exporter in many categories of automotive. I think we are in the early stage of that journey in MedTech. We already have some significant exporters. You take Polymed, they're doing some amazing work. I think they export more than they sell in India. That's a really powerful statement. But what would it? We have only a handful of Polymeds, whereas you look in the West, there must be hundreds. So how can we create more such Polymed stories in India? I think that's a challenge that's worth trying to solve.
So Shravan, if I look at your whole career arc from global operator to now finally medical devices manufacturing leader, you have had various pit stops in your journey, pharma, diagnostics. If you have to reflect and distill one key learning from each of your stints that prepared you for your eventual role, which is the leader of BPL MedTech, what would that one key learning would be from each of these pit stops?
I think across the board, it's managing risk, which is the learning for me. And early in your career, Vic, you think of risk as binary. Like either I do this or I don't. Either I close this sale or I don't, and the outcomes are all in or nothing. But as you run a larger organization, you have more people, and you gain experience. I think you're able to distill a problem into various components, and once you break down a problem into various elements and identify and address the risk in each of them, you realize that it's actually not a binary outcome, and you might have an 80% outcome or a 20% outcome. It's not always 1 versus 0. So that's been my learning throughout. And anything that we do, whether it's a revenue target or a cost target or a headcount target or an innovation target. It's just a sum total of all the risk that is factored into it. I think going back to grad school, it was oversimplified, right? You had like decision
Yeah.
trees and
Yeah.
risk matrices, but actually that's what we're doing here. It just takes discipline to take a step back and identify and address risk, and then I think we can have much better outcomes just
I
acting on
love
it.
the way you
Yeah.
put it. I mean, that can only come with the kind of experience that you have had. Uh, let's talk about your current stint now, Shravan. If and To begin with, if you have to like distill your strategic thesis for BPL 2.0 in one sentence or in a very crisp manner, what is it going to be? Is it going to be about solving for affordability or export grade manufacturing, or what is it?
So I'll share a little bit of the historical context and then come to your question. Now, BPL has been in existence for about 60 years, right? And it may not be known to everyone, but BPL started out life with MedTech, uh, came out with the
Oh, this
early
was before consumer electronics
before
era.
consumer electronics, and I mean they were in measurements and lab equipment in that sense. But they had a partnership with a Japanese company and came out with one of the earliest commercial grade ECG machines in um, uh, in India. And I was just recently at the factory and I saw that, and I want to bring it and put it up here as a museum piece. It's like a briefcase. It's a single lead
The first
ECG.
device.
Yeah, with and today we have 12 lead ECGs with amazing resolution, right? So that's the history. And then consumer electronics and telecom went one way, and then medical came separately with the investment of Goldman Sachs about 12 years ago. Um, Person who took over the business, you know him, Mr. Sunil Khurana, phenomenal individual, ex GE again, and came with absolute discipline and vigor. You won't believe his age when you meet him, but
Yeah.
he has twice our energy, right? When it comes to meeting customers, dealing with the team, and he brought in a certain culture to this organization, and he grew the business 10x in 10 years. Um,
Wow.
it's like a startup almost, right? So that's the 2.0 journey of BPL, I would say, because the first was sort of mixed in with the consumer electronics. BPL was big in white goods and telecom, and medical was just sort of floundering in the background. So Sunil actually gave BPL a presence, gave it visibility in the medical community. It became a credible distribution organization, and we initially there was a lot of import and reselling, and but the facility that you see now was built on his watch, and we're converting a lot of those products into locally produced, locally assembled products, right? So that's a little bit of the background. Now for 3.0, under the investment of Clay Pond, we have again a very aspirational investor who comes with deep healthcare insights and understands that healthcare is a long cycle business. It's not it's not like it's like you guys probably have a much higher ramp cycle in
Yeah.
your business,
Yeah.
very tech enabled as you are. Um, we would love to have that as well, but we probably would grow a couple of points above the market and on an organic basis. But we have appetite from the investor for both organic as well as inorganic growth, and the aim is to repeat the 10 in 10, right? So we would love to be 10x our size in 10 years through a combination of organic and inorganic growth. So if I were to distill sort of the commercial goal, it's that. The pathway of how to get there, again, just taking it step by step, is number one, if we could own more of the products that we sell rather than trade, right? So if we can take the percentage of owned products from probably low double digit to more than half of our products, and then reduce our reliance on traded products. That would be goal number one. Goal number two is to do the same thing with manufacturing. So if you own the IP and these are proprietary products which you have control over the life cycle, then we can also control the manufacturing cycle. Now, India is not necessarily a cheap place to manufacture, right?
Yeah.
And labor as a percentage of the cost of the product is not that high in these products. So even if labor is purportedly cheap, which is not,
Yeah.
it's not going to have that much of an impact. So in order to see scale coming from manufacturing, at least 50% of our products have to come from in-house manufacturing. Once we cross a threshold of say 1,500 to 2,000 crores, then we'll see significant operating leverage. So that's number two. So number one is proprietary. Number two is own manufacturing, 50%, 50%. If we reach those in 5 to 7 years, then we're in good shape. The third thing, once we solve for 1 and 2, it gives us the opportunity to sell in other markets, right? Once we own the product and own the manufacturing cycle, then we can expand the market to other geographies which have similar traits to India.
Sure.
It could be Middle East, Africa, it could be Southeast Asia, Far East, Latin America, wherever, or for that matter, even advanced markets, we could go there. So I'd say this is sort of the big picture, as we're breaking this down into smaller problems, these are the three things that we want to achieve over the next few years.
And Shravan, how do you position BPL in this market? So it's a very interesting market because the top end of the market is completely dominated by these MNCs, and at the bottom end of the market is like completely fragmented. So where do you position yourself in this market?
So we are not the Mercedes or Audi of the market. We want to be the Maruti Suzuki of the market, right? We reliable products, no compromise on clinical outcomes or quality, but built to suit for the market that we serve. So I'd say squarely in the mid segment of the market. If you say, aspirationally premium, but more likely to be in the performance to value segment, where we have affordable products with contemporary technology capabilities. That's the positioning.
Shravan, when you were evaluating this opportunity, what was the right to win for BPL in your mind? Because somebody at your stature and your caliber, you could have gone anywhere, done anything else, raised capital, started something of your own, or taken up an operator role in an MNC. It's very, very obvious that you would have chosen this as your next assignment because you saw something. What was that right to win in your mind?
Yeah. I think if you work backwards from, what I said as the vision of BPL, to be a 4,000-5,000 crore company, I think, yeah, sure, you could have done that as a startup or as any entity, but I think it really helps to have some solid anchor to start with and then build around it. And there are not very many scaled companies in this sector, Vic. So you have several mom and pop shops that sort of max out at the 100 crores, 150 crores range. Yeah. Or you have the multinational companies that are at the 2,000, 3,000 crore range. There are only a handful of entities which are in this sweet spot where the brand is recognizable, where the quality is credible, where the distribution is reasonable. And I think BPL has the perfect ingredients to build an organization around, to build products around, to build capabilities. It's already in that journey. The trajectory is in the right direction. So now with a motivated investor like Claypon, how can we channel our resources towards growing that? Like I said, organic growth, it's going to be very difficult to exceed market growth by several percentage points, right? Let's say market is growing at 10, 11% in some of the segments where we operate. At best, we can probably do 17, 18, 20% through organic growth. But if you want the kind of scale that we are aspiring towards, we need to add products, add capabilities, add geographies. And so you need some vehicle. I think BPL has, it checks all the boxes there.
Sure.
And for me, probably the biggest box was the investor, the aspiration of the investor to say, okay, let's do something meaningful. I've seen the folks from Claypond. It's the Manipal group. I've seen what they've done with Manipal, grown patiently, but still very aspirational. Not no shortcuts there. Very ethical, very compliant. So a lot of those things really spoke to me.
So it was more about where you can take this business along with like-minded stakeholders like the Claypond guys, rather than what, like purely on what existed.
Yes, yeah, and actually, it's a mix, right? Eventually, we are going to work with other existing entities. So whether there's an entire team working behind the scenes on potential mergers and acquisitions. So how we need to string, we need a string of pearls, and this is right at the center. We're going to be adding more to it.
So if I think of competitive moats in your kind of a business, one is product innovation. The second would be manufacturing excellence. The third could be distribution. Uh, I don't know what could be fourth. Brand. I don't know how much it matters in a B2B kind of a.
It does.
It does.
Yeah.
Okay. So the credibility that comes with a brand. So how would you, let's say, on each of these four parameters, and of course, if I'm missing something, where do you think you would have to do, or the team would have to together do the most amount of work in the coming few years?
Yeah. So if you go back to sort of looking at things from a risk matrix or a probability work stream, a lot of these things are solvable just through hard work and investment, right? Like distribution is something that it's just about operational rigor. You identify the team and you execute. Where the challenge lies is in innovation, right? Because that comes with a lot of risk. Identifying the right product, finding the market fit, making it fit with your portfolio, trying to scale it up. So I would index most of my time in trying to identify the right products to give us that moat. Distribution is certainly a moat because a lot of companies are hamstrung by distribution. India is an incredibly complex market to sell into. It's actually multiple markets awkwardly stitched together. It's not a homogeneous market at all. So distribution, I think, is table stakes, right? You have to have decent distribution to just exist. And then how do you scale up that distribution? How do you come up with omni-channel methods to address the market? I think that's fairly structured. It's just a question of putting resources together and working on it. You mentioned brand. I mean, enough books have been written about taking decades to build a brand, and you can sink it in a day. So how do we preserve what's good about the legacy of BPL and then build on it? I'd love for BPL to be seen as a 60-year-old startup, where you have the legacy. People, you walk into any place. I was about to say people of our vintage, but we're not. People of my vintage would know BPL, right? My first TV was a BPL. My first microwave oven was a BPL. So there is that brand recognition there. Many hospitals, their first ECG machine was from BPL, X-ray machine. So how do we build on that legacy of trust and keep that brand going? But at the same time, not be seen as old school. How can we be seen as new age? And in our walkthrough, you saw something that has not yet been announced, right? But if we're able to pull that off, what a coup that will be. Take a 60-year-old legacy brand and reposition it as an AI-first device company. That's the sort of magic that we're trying to create. That is the kind of moat that we want to build. We are actively present in two segments within capital equipment. Right? We are in critical care and we are in imaging. These are core. Any hospital that you go to will have to have these segments. So that gives us, in a sense, a moat because we have an opportunity to be at every hospital in India. Now, how do we take advantage of that and add product capabilities to it? So, from critical care, the next logical step is imaging. We are there. The next logical step would should be, lab diagnostics. We aim to be in that space as well. Um, and digital is everywhere. You can't ignore digital. And by that, I don't mean the bare minimum digital that you require to connect. I mean, IoT is passe; it's a given. But how do you develop connected care? How do you develop interoperability across brands? And that's where being in a company like BPL, being in a local company where the entire decision making group is sitting right here, right? I don't have to pass something up the chain and wait for a global product team to make a decision. There's no bureaucracy here. It's if the business case makes sense, we go all in.
And the market is India first. The whole company is India first, right?
To start with, yes.
Yeah.
I think for now we're constrained by the products to be India first, but we are very bullish and very aspirational to be.
So I was thinking, when being part of a larger MNC, India would be one of the 20 markets, right? And the product team, doesn't take a very market specific views. For them, it's the real operating leverage comes when the same suite of product gets sold to multiple markets.
Yeah.
So getting something done for an operator for specific to a certain market would be far more difficult.
Yeah. And look, every single MNC, they have a India strategy, right? They're like, India is important, 1.4 billion. But by the time that strategy translates to action, you have finite resources that you're competing for, and let's face it, the reality of it is, there are many markets that are much larger than India. The price points for the products are much higher in other markets. So as much as companies have the intent to innovate in India for India, it just naturally falls a little lower in the list of priorities. But that is changing. I think GE saw the memo decades ago, and the kind of innovation that GE has dedicated towards India was phenomenal. But other companies are following suit, right? Medtronic has a dedicated India approach. Terumo has a dedicated India. Danaher Group, a lot of the big multinational companies, Siemens, Philips, they have very strong, India R&D and manufacturing capabilities. So that trickle has started. It's not yet a flood.
And I think once you crack the playbook in India, which is probably the most difficult market for a MedTech company to crack the playbook in, then taking that playbook in a market where naturally your margins level or your economics are better would be much more easier compared to the other way around, where you bring in a product which was developed for let's say the US market to India.
Yeah, and your point is exactly right there, right? So most of the so-called India engineered products are nothing but reverse engineering from other products, right? Even the best of companies, they remove the bells and whistles. To be fair, they never compromise on clinical outcomes or utility, but it might be some of the creature comforts or the user experience might be a little simplified, I should say, to make it more affordable for the market. And there is a market for that. There is utility in doing that. But I think India is now a large enough market where they value, engineering a product for the market. I've been on the road now. I visited over 200 customers in the last 9 months. The appetite is very high for innovative products. There are a lot of problems to solve. And I think this is where we need to play to our strength. And we are very strong with digital capabilities. And we do have strong mechanical engineering capabilities. How can we put that together? Our universities are producing terrific students. We are not collaborating enough with the universities. It's such a juicy opportunity to just work with universities, work with the government. The government is also very open to collaborating. So I think all of these, we're in that perfect storm now where it just has to come together, and we need to do something about it. but it's a market is also really tough,
Yeah.
very price sensitive, and it's rightly so, right? It's not a very well reimbursed market, and while insurance coverage is wide, it's not very deep. The amount of healthcare reimbursement you get for a procedure is
Minuscule. Yeah, yeah,
is
yeah.
just a fraction.
Sure, and as you rightly mentioned, especially in the last 5 years, a lot has been changing in medtech, both on the policy side as well as on market dynamics, and I'll come to that later. But let's take a step back. Historically, we saw corporatization of healthcare since the early 2000s. We saw the rise of Apollo, Manipal, and all these groups. Uh, why did we lag behind, or as a nation, let's say in terms of our import dependency? What was the reason for missing out on those 2 decades in your mind?
I think our corporate healthcare journey is actually not that long. And you mentioned
That's 20
Apollo.
years. Yeah, yeah.
It's just one person's journey. It's Dr. Pratap
Yeah.
Reddy's journey. So it's not like we've had multiple. Of course, he has multiple generations, but we've only been in this journey for 50 years, which is a
Yeah.
blip in the overall scheme of things. And 80s and 90s, India was not yet a liberalized market. So it was only in the 90s that we started coming out and recognizing the value. You speak to Dr. Harsh Mahajan of Mahajan Imaging.
Margin.
He'll tell you the story of the first MRI machine that we had to
Yeah,
that G had to bring in, and the customs duty that it incurred.
yeah.
So it was a very very complex and tough market to
Yeah, he
work
told
with.
me for 6 months he wasn't able to get hold of the machine because of the custom clearance.
Exactly, right. So things were just evolving
Yeah,
then, and we had sort of an outlook of, if you don't really need something, make do with what you have. There was a bit of a jugaad mindset about medtech, and it wasn't a priority. The other thing is, in order for innovation to flourish, in order for scale to make products affordable, the domestic market has to support it first, right?
Yeah.
You can't just say, I'm going to develop CT scans in India for the purpose of export.
Sure.
It makes sense to drop anchor here if your domestic market is strong, and our per capita GDP just does not support the kind of investments that you need to build medtech at scale. 20 years ago, I came back to India thinking, that was the right time, and there was a lot of, I mean, the market was upbeat. A lot of the other industries had picked up, like I said, automotive earlier, and a few other segments. So I said, hey, this might be the time for medtech, but there was still a bit of a lag. There was deep mistrust about intellectual property, right? And you know, what is that book? A Bottle of Lies, about intellectual property challenges with the pharma side. That I think created. There was a bit of a negative perception about sharing intellectual property with India, which slowed down our development. I think we're well past all that now, right? Our IP regime is quite strong. There's a lot of cross-border collaboration. There's a lot of cross-border licensing. As we speak, I'm working on multiple cross-border licensing opportunities. I'm not talking about trading, actually licensing products, licensing technology, owning the IP, and bringing it here. So now we're in that sweet spot where the market is large enough to sustain innovation. Global innovation engines are looking at India seriously to trade with and partner for IP. University system is churning out biomedical engineers and computer science, mechanical engineers that are able to put the pieces together. But we're still lacking in certain areas. One, bee in my bonnet is UI UX, and if you look at the finish of some products that you find from Western Europe, or for that matter even China, I mean, they're just really really special. I think there we have a long way to go in India. That's where I'd like to spend some time.
And Shravan, so since the time you left GE compared to this day, Do you think that the tailwind that we have all been waiting for is now finally there in medical devices manufacturing?
It's there, but it's not like it's not like gale force winds. There's a gentle tailwind,
Okay.
and I think if we harness enough wind, we can towards an entity, we can make some magic happen here. And where I said, I think if we play to our strengths, if we work towards digital enablement, AI, I think we have a force multiplier here. If we partner intelligently with technology providers and universities and other innovation engines, startups, I think there's something that we can do. But most of it is just going to be focused on execution, right? How do I scale up my go-to-market? How do I use digital tools to enable my team, my channel partners, my customers? So I think 80% of it is just going to be disciplined execution, and that 20% is going to come from the cream on top.
Interesting. I'll soon like to deep dive on the education part, but I have one final question on the macro part. So a lot has been said about how we can both learn from China as well as reduce. A lot has been said about how urgently do we need to reduce our dependency on China. So as of today, they have the scale, they have the cost advantage, they have the discipline. Uh, in the next 10 years, how do you think India is going to be positioned? Are we going to compete with them head on, or are we going to be positioned differently? What's your take on this?
So I think the whole context of competing against China stems from a geopolitical mindset, right? Like we started out as China and India
Yeah.
growth story, and then everything that's going on. Um, but I don't think that really matters in that sense. There's no escaping China. We have to work with companies that design products or design capabilities in China. I've been there twice in the last year. I've been amazed by their
Yeah,
technology,
yeah, yeah.
and they're also eager to partner and work with India on a commercial basis. I've spent time in Korea, previously in Japan, across Europe. So I think we really have to think about where we get the best utility for what we need now. And I would much rather collaborate with China than make any attempt to
Sure.
compete against them. But there might be certain pockets where we can truly excel. I want to build on those strengths.
Sure. Let's talk about now. Let's look at have a micro view now and talk about the execution. You mentioned about making a shift in the mindset of the organization from trading to becoming a manufacturing organization eventually. What does it entail to carry out that shift? I mean, because the whole organization is wired in a certain way.
Yeah.
Uh, what's your game plan?
So the good thing is the team wants this, right? Because they face competition in the field from innovators and companies with proprietary products. So the team is hungry for it. So it's not that difficult sell to them to say, hey, we want to move from trading to innovation driven. But it does require a lot of discipline. It requires a lot of training. The way in which you sell is completely transformed. You're not selling a commodity on price. You need to get into what is the clinical utility, the value you're creating, what is the brand perception. So there are a lot of changes in place. While our strength is very much distribution, we have very loyal long-term channel partners. How do we augment their capabilities? How do we train them? How do we support them? So I think the playbook is fairly straightforward there. And we've seen other companies do this, move from trading to innovation based. We've seen multinational companies do it. So we were actually recently having this debate: should we pilot a couple of geographies and do it, or do we go all in? I think this is where the collective experience of our team, of our advisors comes into play to say, look, we've been doing this for 20 years. It just happens to be in different companies with different characteristics. So how do we pick up some best practices from our own experiences, our competitors, other industries. It doesn't have to be MedTech, and then patch it together. But like I said earlier, Vivek, it's just execution is going to make all the difference. The ideas are there in plenty. Yes, culturally there will be a shift, and I think we're prepared for that. And we're over communicating, if you will. I think there's which Mindtree has this philosophy, right, of 95, 95, 95 transparency. I'll have to look up the exact terminology there, but it's like 95% of the company should be aware, should have 95% awareness of 95% of the things that go on in your company. That's something that we're doing now, so that the team is very much aware of what's coming, of the skills that they might need to build. We've started doing a lot of training. You met one of our trainers upstairs. Every week we have training, we have engagement. I'm in the field a lot, at least 2 days a week. I'm in the field with my team, my customers, my channel partners, and learning from them, hearing from them, and then sharing what our vision is. And it's not like we've drawn a line in the sand and said, from tomorrow we're going to be this way. It's an iterative process, right? We still have the entire team from before. We're carrying them along, but we're bringing in new talent as well, and we're creating a bit of that mix. So I think it'll be initially, it will appear gradual, but over time, I'm hoping it will be exponential once it all falls in place.
That's actually a very interesting take, because I mean, a lot of attempts are being made to crack the medtech industry through either the venture capital route or the private equity build out route. But one distinct advantage that you guys have is 50 years of legacy. I mean, especially when you think of distribution in that sense,
Yeah.
the brand name, the 50 years of legacy, your channel partner having deep inroads with lab diagnostic
Yeah.
centers and hospitals. It's only about bringing up a mindset change in that network.
Absolutely.
Great. Let's talk about the culture of quality, Shravan. In the sector that you operate, actually, quality is not optional, it's life critical. Unfortunately, a lot of attempt that is being done in India on the medtech side is about making cheap imitation of what exists, of what comes from the West. How do you intend to make quality as a second nature, and for whole organization? What are the first few initiatives that you have planned?
Yeah. So, as you can imagine, both with me coming from GE, Mr. Khurana coming from GE, there are a lot of people here who come from that school of management and operations. So, quality is very core to what we do. And it's not just, of course, we have a quality assurance department with, they have a checklist of things to do. But I think this is very much ingrained in our system. And I think, to be fair, it's across the medtech world, because you can't afford to put out a product that is subpar in terms of quality, or that puts a patient's life at risk. There are many ways to measure this. Mean time between failure is sort of the standard by which we look at it, and we measure that, and we're always trying to improve on that. We've instituted a weekly system where all functions sit together and air out issues, right? So there are no surprises to anyone. If a product has failed in the field, we immediately bring it back, we notify the customer, and we start working on it. MedTech does have that challenge. I mean, a lot of moving parts, a lot of mechanical parts, a lot of dependence on third-party providers for components. So it's a bit of a learning exercise there also, especially when we're launching a new product. But with established products, I think there's a good amount of confidence in the product quality. But we need to keep pushing that boundary and work towards, you come from automotive manufacturing, so Six Sigma is it has to be where we land in manufacturing.
Whenever I ask any medtech CEO about what is their biggest challenge, capital comes as the foremost challenge that everybody mentioned. And with the kind of partners that you have, I'm assuming That's not the foremost challenge that you have right now. So, what is the one non-capital execution challenge that you are facing right now?
By the way, capital is a challenge because, in a sense, our investor is, of course, um, generous with the funding, but everybody has expectations on returns. And quite often we debate on, what's the best utility of equity versus debt, right? So it's not that our investor has infinite deep pockets. We are extremely mindful of our spend, our cash flow. And again, it's not a startup. So we have decades of discipline when it comes to cash flow management. And in fact, we probably need to push ourselves in the other direction to say, okay, can we accelerate spend a little bit to scale or to build a brand and things like that. Having said that, the big challenge I find is actually in stitching together scale, right? Um, we we have many pockets of excellence, but how do we pull it all together? Um, of the three big things that we're trying to do in terms of innovation versus manufacturing versus export, I think if we're able to solve for innovation, it would really help us in number two and number three. So identifying products, identifying partners that would help us bring, game-changing technology to the market is the biggest challenge. In each of the segments that we operate in, we aspire to have one product where we are either first in class or best in class or both, and that would really give us some depth in the market. That would put us, in a league above the mid-range medtech companies in
Sure.
India.
Sure. Uh, you mentioned about product innovation, Shravan, and I just took a tour of your facility, and I saw a very specific product philosophy, which was integrating artificial intelligence into the imaging device itself,
Yeah.
and completely, let's say, going away from cloud dependence.
Yes.
Now, that's a very specific product bet. Uh, I would like to understand the product design philosophy behind this and your product design philosophy in general. And second, I would also want to understand that your product design philosophy, is it driven by dominating India or becoming competitive at a global stage as well? And by the way, are these two different mandates, or does it require different approaches, or it's the same approach?
I think they do require. There is some alignment in these mandates, right? Because if you identify a terrific product which can sell in India and the world, we totally want to do it. But today we are geared up to scale in India because we have the distribution, and so our immediate priority is to launch this in India, make some noise about it, and then very rapidly use this as a Trojan horse to enter other markets. We have partners with terrific capabilities in AI and digital enablement. We have our own in-house team also that does it. But if we can scale faster with a partner, we are very open to doing that. And over the last 9 or so months that I've been active in this role, it's amazing how once you get active in this, and you've been in multiple startups. Once the word gets out that you're open for business, open for these kind of thoughts, um, there's a lot of traction there. A lot of people step forward, a lot of doors open. Of course, with the kind of investor that we have, people take us seriously now, and we're having multiple conversations in India and overseas to bring in this technology. This particular thing that you saw here is entirely homegrown. Um, Even our partner is local, so they have a seat here, and they're constantly tinkering with the product. And of course, they come with a startup mindset, and they're ready to launch right now. We come from a slightly old school, test it, make sure you eliminate all bugs. I think we'll meet somewhere in between, and we want to hit the market next quarter with that product.
Amazing. Uh, Shravan, when we talked about, while your investors being deep pocketed but very disciplined as well. So, take me through your capital allocation strategy in the next, let's say, 12 to 24 months. So, there is always a trade off between, let's say, going deep which means investing into R&D capability, but that will deliver result only not in the near term uh, uh, or midterm, versus strengthening access, market access, and distribution for existing suite of product. How do
Yeah.
you balance these trade-offs?
Yeah. So right now, immediate priority is strengthening market access, go to market, right? We have a decent suite of products. And especially the last 2 3 years post COVID, we've launched quite a few very viable and credible products. So for the next year or 18 months, I'd say, what can we do to really strengthen our GTM to make sure these products are well recognized and distributed? So that's priority number one. Priority number two, in terms of capital allocation, is in product innovation. That, as you observed, could come through R&D that you saw here. The R&D life cycle is very long, but R&D is also segregated, right? There's core R&D where you're developing new products, versus value engineering where you're just tinkering with the product, or sustenance engineering, as we call it. So most of our R&D effort at this point is spent on sustenance engineering, making these minor tweaks. I spoke about the ECG earlier. How do we get to that one next iteration of the ECG? But if we really want to move to the next level or leapfrog, then we need something really, earth-shattering, either to come out of our R&D shop, which is going to take 5 years, or we need to partner, license, acquire. And there again, it's a trade-off of time versus money. And we have limited manpower resources also to be able to integrate these products. So I'd say the priority there is time. So if we can license a few good products, bring it in-house, or if we can acquire some small companies, we do some acqui-hire, we bring in that technology. At the base, if we have strong distribution, we can really do justice to bringing in these innovative products. So that's the prioritization.
Uh, Thanks, Shravan. I think this 1 hour shoot was nothing less than I would say, a capsule MBA for the for the viewers who are watching this episode. But before I let you go, I'll come to the favorite part of my podcast, which is the rapid fire.
Okay.
So, candid questions, organic answers that come to your mind. So, my first question is, and this on the business side, what is that one technology apart from AI, of course, that you think is going to radically change MedTech in the coming years?
So I think anything to do with remote care is going to change healthcare. I'm a disciple of Dr. Pratap Reddy, and every time I meet him, he says, and it's so paradoxical. They run one of the largest groups of hospitals in Asia. He says, I want to keep patients away from the hospital. Find me a solution that keeps patients out, and that will be game changing. So if we can identify solutions or products that can be utilized, medical grade products that can be utilized at home or on the move, to me that would be best. And that's going to be a combination of everything, right? You're going to need digital solutions, connectivity, high resolution sensors, AI, command center at the back end, which is supporting. So that's what I'd say.
What's your one prediction about the Indian healthcare sector today, uh, that you hope comes true by 2030, and it is not obvious today?
I guess it's sort of obvious, but it's still not played out. I think the second and third tier healthcare infrastructure is going to be world class and contemporary by the time 2032 rolls around. I've actually been spending more time in the smaller cities and towns than in the big cities, because I think that's where real healthcare is delivered in India.
Yeah.
And they are hungry for technology and solutions, but they don't have the scale to accommodate some of the large products that the corporate hospitals have. So I think there's going to be miniaturization of technology, better access and affordability. Today, I'll give you an example. Cath labs. 5 years, 10 years ago, it was only the really sophisticated hospitals that had cath labs. Now you go down the street, you go to Involution, they've built Asia's largest cath lab factory. And I mean, they are going to put a cath lab in every district in India and much more. I think that's going to play out in the next 8-10 years.
What would be your one piece of advice for founders, builders, engineers, operators in the medtech space?
Oh, I think listen to, it's fairly obvious stuff. Listen to your customers. I think really hear their needs, but don't necessarily do exactly what they tell you. I think you should surprise them, wow them with something beyond what they asked for. I think that would be my
Good
goal
that
here.
you did not give any proprietary information or advice or any playbook. Some of these may actually. By the way, do you lose your sleep thinking about uh, a young, agile team coming up and trying to disrupt your business?
All the time. Yeah. That's and I also think it's inevitable, and in a way I would welcome it because I think disruption is good for the industry overall, and but I'd love to be part of that journey. I'd love to embrace that and bring that in. Right, we want to be a 60-year-old startup. So if there's someone who wants to disrupt, let's do it together. Is what I'd say. But that's happening, right? We have I came across a amazing company in Hyderabad called Monitra. They make a product called Upbeat, which is it's a patch that you just place against your chest, and you send a patient home, and you get very high resolution ECG results from this.
Okay.
It's going to transform ECG as we know it, and we're seeing it happening in front of us. Right? So we better embrace this kind of technology and run with it rather than complain about it.
If you weren't in medtech or weren't in healthcare, what would you be doing?
Swimming coach. I do that anyway. I volunteer once in a while as a swim coach. Still very passionate about the pool and love working with kids.
Great. Thank you so much for being on the show, Shravan. And thank you so much for being super candid and honest about your life experience.
Thank you so much, Vic. So glad to have you here, and thank you to the team also for all your support.